touching the lives of local people every day.
Hello, welcome back. This is Business Extra. Now, it's thought at the moment there's more than £15 billion of unclaimed money in financial institutions all over the country. That's cash left in forgotten accounts, maybe with no obvious link to the families that are entitled to it. Tonight, I'm joined by Bruce Kane from Monimine, a Norfolk business who are trying to reunite the two. More on that and how this kind of thing can actually happen in the first place in just a moment. But first, let's catch up on the business headlines for the week. Let's start with how some businesses across Norfolk and Suffolk are going to be among those expected to lose on around £4.5 million after a potato supplier in the region went under. Administrators Price Bailey say that Preva Produce, who were based near Dereham, were placed into administration back in December after a £1 million shortfall as debtors were discovered on their balance sheet. Business advisors were brought in to try and rescue the company, but they couldn't find a buyer and are now attempting to complete selected contracts to recover money for creditors. The Norwich and Peterborough Building Society says it will remain flexible on the deadline for its current account holders to find new banks after concerns were raised that other providers couldn't cope with the influx of new customers. The NMP are closing branches across the region and are withdrawing their current account service too. They're not part of the automatic switching service, so any moves to new providers are having to be done manually, which takes longer for the other banks to process. And the strength of Norfolk and Suffolk's technology industry has been underlined by a new report which values its contribution at more than £320 million. The Tech Nation survey, published by Tech Cities, once again said that Norwich and Ipswich are digital clusters and shows off how the area has changed.
A few years ago, Norwich wasn't necessarily known for this. I think what's kind of happening is actually there's an awful lot more ecosystem, more businesses, more noise, more recognition. There's a lot of things going on here in Norfolk, particularly in Norwich. We've got great universities. There's things like Tech East, which has now come along to kind of pull things together and raise the profile. We've got some great businesses that are doing amazing things. And I think we're also finding, again, evidenced in the report, is that Norwich is being voted as a great place to live.
OK, let's get back to the subject of the amount of cash left unclaimed in dormant or orphaned bank accounts. It's billions, according to the government. My guest tonight is Bruce Kane from Monimine, a company from Wymondham that tries to put those funds back to their rightful owners. Good evening, Bruce.
Good evening.
Now, a lot of people might be shocked when they hear the amount of money that's currently sitting there in bank accounts. Some say 15 billion, but I understand it could actually be a lot more than that.
In actual fact, it's probably nearer 24 billion. The FCA, the Financial Conduct Authority, produced a report earlier this year that highlighted that there was another 14 billion that had not in the pension funds that hadn't been accounted for in the 15 billion that had been declared by the government back as long ago as 2007.
Well, that's huge amounts of money in anyone's book, but how does this money end up being lost or forgotten about or disappearing, I suppose?
It traces right the way back to the 1920s and beyond, or coming forward as well, where you've got things like, some people remember the penny policies, the man from the Prue coming round, collecting the penny or shilling or whatever a week. All of a sudden it gets forgotten, the payments stop for whatever reason, but those policies now are worth between £300 and £4,000, and there's hundreds of thousands of them still out there. Then there's the grandparents that decide to take out a nice little investment policy for the grandchild that's just been born. Dementia comes in later in life, and they forget to pass those details on to the parents, and there's another pot of money gone.
So those are just some examples, but I guess it could be bank accounts, it could be insurance policies. I guess the list is pretty much endless.
It goes right across. It's pensions, insurance policies, bank accounts.
You name it.
You name it in a financial institution. And the big monies are always, the financial institutions make a real effort to find the big money.
So when we're talking big money, how big is big money?
The big money is plus £10,000. They've got it. They will go and look for people. When it gets less than £10,000, and you're talking sometimes, in the hundreds, it's not financially viable for the financial institutions to find them.
Why is that? Why is it not in their interest to try and get this money back to people?
They will hire companies and give blocks of work out to trace people, but for a company to trace one beneficiary, they've got to buy the will, they've got to look for the beneficiaries, then those beneficiaries might have died, they then have to find their their children, trace it all down, verify who they are, and that can cost between £120 and £400, sometimes even more.
So it might even be more than the amount of money they're trying to reunite with someone.
Exactly, and also the financial institution could have 10,000, 20,000 cases that tick that box, and it's just not financially viable for them to actually spend the millions, £400 times 10,000, it's a lot of money to be tracing or paying out for the small amounts.
Oh, because if nothing is done with this money and it just sits in these policies or accounts, what happens to it?
It just sits there in the client accounts of the financial institutions forever. But there was a commission set up by the Cabinet, which is called the Dormant Asset Commission, which did a report that came out last month, where they are trying to set up a system where if it's dormant for more than 15 years, and the word dormant means inactivity, for more than 15 years, it will get scooped up and then distributed to charity. But what you have to remember is it's our money, it's the people's money. There might be 10% of that there is no beneficiary, that the line has just died out, but most of the time there is actually a beneficiary. And up until recently, it's been very, very hard for the financial institutions to get in touch with the beneficiary and vice versa, because many companies, if you take pensions that were taken out in the 70s where the employer contributed, not the employee, could be your first job, 15 years old back in the 70s, you have your first job, you stay there for a couple of years, you move on, there could be £1,000 pension there. 50 years later, there you are, you don't know about it. And that pension company has been...
in that time you've probably moved house 10 times, the pension company's changed name 3 times and has been bought out by 2 different people, and I suppose then it's lost.
And then there's the mess of trying to find it. So until recently there's been no portal that the general public can go in, and it should be free to the consumer. So they go in, look at it, put in all their details, because it's not necessarily their money, it could be their parents' money, it could be their grandparents' money. Capture all that data and then match it against the financial institutions' data, which means the costs plummet for the financial institutions, and once again it's free for the consumer. All they have to do is prove who they are and that everything they put in is correct, and the financial institution will pay them out.
So I guess it's just approaching the problem from the other way. In the past, the financial companies have been expecting people to come to them to actually say, you have this money, but they don't know it's there. Your model is switching the other way around.
Exactly. The onus has always been on the financial institution to track down the beneficiary, but there is a certain fiscal responsibility on the general public to look after their financial being, but they didn't have the tools to do it. So that's what we're endeavouring to do, is to give those tools to the general public. And a lot of the time the financial institution, because the data capture wasn't as in depth as it is now, so there was no national insurance number taken, they just have a date of birth and a name of a person and an address. As you pointed out earlier, that could be 10 addresses ago. But if you can actually say that was my address or that was my parents' address back then, because a lot of us were living at home when we had our first job, so you put in your parents' address, so all of a sudden the addresses tie together and the financial institution can repatriate the money.
Well, that's the idea. Bruce, thank you very much indeed. It's a fascinating idea, but that is all the time we've got for tonight. Do remember to drop us a line with your thoughts and stories. We're at Mustard TV on Twitter, and you can find us on our YouTube channel too. Business Extra, back same time next week. But for now, thanks for watching. Have a very good night.
course, touching the lives of local people every day.